Hello, everybody, and welcome to Before the Bell in 3D. This is week 31, 2023. I am about to show myself on the screen. 1 second. Here we go. Hello, everybody. How are you? Good to see you all. Happy Monday. Ready to trade? Definitely, the market is. The market has been trading for many hours already, but specifically, the equity markets in the US will start trading in 1 hour time, which is a perfect time for us to get organized. My name is Jose Blasco. I will be taking care of the session today. On the bottom part of the screen, you can see that there is our financial disclaimer. Please read it carefully. And the session today, it's about looking at 5 key markets, as we do every Monday, to prepare for the week ahead. We're going to be looking at daily timeframes of the S&P futures. We're going to be looking at crude oil futures, gold futures, the dollar index futures, as well as Bitcoin. And by looking at those markets, we'll get a better understanding of what's happening out there worldwide. And therefore, no matter what you trade, hopefully this session will be useful to you, again, to get organized, to start planning ahead, and so on. So let's begin. Let's begin the session, and notice that on the screen I have a trading view with a chart of the S&P 500 index futures. I will alternate between trading view and a web page, in this case in our LinkedIn portal, if you wish, where we have our Before the Bell in 3D week 31. I will use this information for supporting purposes. This is our newsletter, which, by the way, you could subscribe and get access to. Let me give you a link to do that in case you haven't done it yet. And the reason why this is a good thing to do is because if you happen to not to be able to attend this session live, well, guess what? A lot of the information I'm going to cover in a spoken manner right now, live with you, is also written on the newsletter, so you can have it as a backup, something that you may want to reconsult in the middle of the week. So again, just feel free to subscribe to it. You will also receive it in an email format once you are subscribed, and of course, no need to say the subscription is free. Anyway, the 5 markets we're gonna analyze: S&P, crude oil, gold, dollar index, as well as Bitcoin, as I said. And we're gonna start with the S&P futures. Now, notice that here I got a static screenshot on the screen. I'm not gonna do that. I'm gonna be using real-time charts. So even though I'll come back there as well, so you can see where you find the information you need. But basically, here's a chart of the S&P 500 index. I could zoom in a little more. And as we look at this market moving in a specific direction, the very first dimension of our analysis I want to explore is the climate. I am utilizing a tool here in the bottom part of the screen. It's called Auto Climate. You can find it for free on our website, actually. Let me give you a link in case you have never been in our website yet. So here's a QR code and a URL. You can grab it and go and take a look. And when assessing that website, so you will see one of the tools that we use produces these dots, thick like today, thin like the prior day, sometimes thick, sometimes green, sometimes thick, sometimes thin, sometimes blue, and sometimes red. So what does it mean when those dots are thick and blue? Well, it means that we are dealing with an up climate. So statistically, we have a statistical advantage by being a buyer versus being a seller. Now, of course, then we need to set our entries and exit prices, which I'll talk about that in a moment. But first thing, even before we start trading, we should know if today we are a buyer or today we are a seller, instead of just trading whatever direction and see what happens. Let's put ourselves on the right side of the market, right side as defined as the one that carries with it a statistical advantage. Of course, we can be wrong, and even statistics are not always met. And therefore, of course, risk management, you've read the financial disclaimer. Maybe I can get rid of it now because everybody has read it. But basically, risk management is absolutely key. And in that sense, it's something for you to keep in mind when doing your trades, that we use tools to enhance our odds of success. We have a statistical edge, but it doesn't mean we're going to profit every single trade. For the ones of you who are experienced, you know that very well. For the ones of you who are new, you need to understand that from day one. Okay, so we always have to protect our risk when trading. You can do things as simple as using a stop order. Okay, there are other alternatives as well, but this is one very commonly used. So anyway, so climate is up. The statistical duration of our climate is 8. So there is a figure there that says one standard deviation of up climates, it's number 8. So we just started a climate, a normal thing to happen, which is a simplified version of a one standard deviation. If I was to use layman terms to explain what is a one standard deviation, I would say a normal thing to happen. So a normal thing to happen, something that happens often, it's 8, right? That's the expectation. So if that's the expectation, then 1, it's the very beginning of this cycle, and therefore we may be in for a move to the upside. Okay, this is what statistics suggest, which is very important. Okay, but let's move into dimension number 2, because while it's very important, there are more elements in the market which have an impact. That is why we call our market commentary 3D. That is why the newsletter is called 3D. The first dimension we analyze is the climate, which is sunny, blue color, thick dot. But then we need to get into UFOs, which stands for on-field orders. And guess what? If you're new to this, on the chart, they do look like UFOs. Here you have them. Red for sell on field orders, green for buy on field orders. So we are entering an area where there are many sell on field orders from the current price all the way to 4,800s. So what does that mean? It means that while the climate suggests, statistically speaking, this market is likely going to go higher, well, this market is hitting already as we speak. You saw that last week on Thursday. But this market is, again, one more time, hitting sell on field orders. And as they hit the market, those sell on field orders will likely bring the markets down. So we may get a situation where we have a climate that does not propagate, like, for example, what happened here, where we expected 8 blue dots. It's all the way on the left of your screen. We expected 8 blue dots, and it was only 3. Okay, why? Because the on-field orders in the market did not allow for the climate to propagate. So this is very important to understand, to set our expectations right. You don't want to get into a trade, expect to reach a very far away target. Next thing you know, you see yourself in profit for a little bit, and then the market turns against you and stops you out, and you wonder why. Well, you were only looking at the direction, but you were not looking at entries and exits, which exits, by the way, are just as important, or maybe even more than entries, depending on your methodologies. Anyway, so we got sell on field orders at this red value. We got buy on field orders at this green value. The values are, you can read them easily on the spread on the news flash. 4606. That's where the sell orders start, all the way until 4671, and the buy orders are located at 4634.5, which are a little bit lower in price. A little bit lower in price. So that's what we have when it comes to orders in the market available right now. Now, the third dimension that we need to discuss is the volatility. Okay, and volatility is understood by different people in different ways. In my case, I refer to expected moves. And how do I know what is expected? Well, to know what is expected, what we do is that we look at options data. Options are trading at specific prices, which imply a larger or a lesser move into the future. Again, we could talk about options pricing models. Obviously, today is a market commentary. We don't have time nowadays to do this, but basically, the options pricing models have many variables built in, and when an options price is trading at a specific level, if you were to reverse engineer those pricing models, and again, I'm really oversimplifying how really this works behind the scenes, but I guess that it will make sense. So if you were to reverse engineer the pricing models, knowing the prices of the options, because you could go and see the real-time price of the options right now, so then you would then understand that then the expectation for the market move was of 38, almost 39 points per day on the S&P, 85 points per week on the S&P, 177 points per month on the S&P. So by knowing what is expected from a price movement point of view, compared to what is the statistical direction versus or combined with the UFOs, which tells you about potential turning points into the future, which could be used for entries and exits, with all of these combined, hopefully you are now getting a great understanding of what's likely going to happen to the S&P, which, based on what I said, probably going to go higher a little bit before it corrects, probably a bit more severely until it gets to 44.76, right? So it may go a little bit higher, comes back down all the way to 44.76, and from there it goes back higher. Okay. That's the expectation based on this market analysis using a daily time frame based on the specific application I do when I use the tools. Of course, we're all different. You may have different trading plans, different methods. You may use different time frames, but still, I'm pretty positive this analysis is useful. I'm switching now to crude oil, and now I will accelerate a little bit the covering of the information since I spent some time to give you the rationale behind how we think of markets, how we analyze markets. So with crude oil, we got an up climate with sell orders at 79.81, buy orders at 76.87. Let's take a look at how this looks like. So up climate, even though I need to make a comment about this up climate, sell on field orders, up here 81 something, buy on field orders here 76.87. So that's where we're at. So again, what's likely going to happen to crude oil? Well, just a little bit of a pop, and from there going down. Okay, that's what's likely going to happen, especially given the fact that a statistical duration, a normal statistical duration for this climate was 7, and this climate has been running for 18. That is almost a 3 standard deviation of duration for a climate, which is definitely a fantastic move. And I guess that visually speaking, we all see it, right? This did not happen for a long time the way it happened, isn't it? Even that move, it was maybe a bit more vertical, but didn't last as long. Okay, so anyway, that's what we have now. Volatility, expected moves extracted from options on crude oil futures. That is 1.49 points a day, 3.28 points a week, 6.83 points per month. Next market to analyze is gold. So let's look at gold real time. 1, 2, 3. Here's gold. Spectacular move, beautiful trade identified by this UFO that we discussed last week. Gold went dropping down like the world is ending just to hit buy orders, and next thing you know, turn direction and moves aggressively in the opposite direction on his way to 2028, which is the next set of sell orders, and a new climate just started. Statistically speaking, this climate is supposed to last for 6 days. So we may get a little bit of, up and down, up and down, up and down for like 4, 5, 6 days, hit the orders, and from there back down again. Okay, so this will be the expectation for gold, given what we have on the screen at this moment in time. Speed of movement at a rate of 14.81 points a day, extracted from options on gold futures, 32 points a week, 67 points a month. Next market, the US dollar, sunny climate. Okay, sunny climate for the dollar just started 2 candles ago. Okay, 2 candles ago, which reinforces even more the fact that crude oil is likely going to fall as this market goes back higher. Statistical duration for up climates on the dollar is 5. This is 2 in the count, so this should continue going higher, and there is indeed room to go higher until we get to 102. Okay, so 102 something, sell orders, 99.86 buy orders. These are your UFOs. Again, you can find more information about all of these on our website in case you have not seen it or you join us a bit later in the session. I will show you the QR code. And going back to the newsletter, expected move would be 0.45 points per day. This is extracted from options on currency futures, 1 point per week, 2.08 points a month. And let's keep going. We are now moving into Bakkt Bitcoin, which is the last market that we will analyze. So let's take a look at Bakkt Bitcoin. So what do we have with Bakkt Bitcoin? We have a down climate. Statistical duration is 5. It's been running down for 9 candles already. So statistically speaking, it may start going higher anytime. But the fact is that we don't have buy orders until it goes to 27,000. So we may be set for a further move until we get to those levels and then back higher. Okay. But at this moment in time, that's what we have. Okay. So in the case of the Bakkt Bitcoin, we have a little bit of a rainy climate. Sell orders located at 29,772 and buy orders located at 27,420. With expected moves extracted from options on Bitcoin futures, which is 757 points a day, 1,667 points a week, 3,470 points per month. Great. So economic calendar is the next subject. I wanted to very briefly just mentioned the way we think about what we do, which is, we provide you with intelligent trading technology, but by itself, of course, is not enough, because if you don't know how to use it, well, technology could be great, but then you don't know how to use it, so that's a problem. So then together with our technology, we have courses and coaching to further get you to practice what you learn in the courses with the technology apps that we have, so you can then develop a skill beyond having some understanding or knowledge. You can actually, have a skill, okay? And with the tools, just implement it. So busy week, as you can see from an economic report point of view. We got GDP numbers in Europe. We got interest rate decisions in Australia, unemployment in New Zealand. In the Bank of England also, we have important decisions when it comes to interest rates and everything else. And then, of course, being the first Friday of the month, on Friday we'll have the unemployment number in the US, which is one of the most important figures of all. So this week is relatively busy. Of course, the US numbers are normally the most impactful ones, so I guess that in the latest part of the week, this is where we may see impacts. But certainly for specific products like in Europe, in Australia, in New Zealand, and indeed in the UK, there will be impacts that may be quite relevant for such markets. Okay, so before we complete the session, and I'll flash a QR code on the upper left side of the screen. We have a book. It's called Mystery to Mastery series. This book has won 3 number 1 new release awards in Amazon, which is great. This book is available in paperback format as well as electronic book, and we welcome you to go take a look and purchase it and enjoy it. Together with the book, you have access to our technology for a number of months, and also access to a course, which basically it's all the tools you need. You have educational material for you to read, you have a course for you to attend and learn, and then you have tools for you to practice during a collection of months. So if trading is for you or not, and if it is for you, then you're ready to kill it. Okay, so anyway, happy to help you, happy to be here for you guys. Thank you for joining me as always. So it's my pleasure to begin the week with you guys. Have a great trading week. See you in the next one. And if you need anything from us, guys, find us on the website. There is a forum with questions and answers. There are emails that you can contact us, etc., etc. So do not be a stranger. Be engaged with us. We'll be happy to be engaged with you and help you in your trading journey, wherever you're at, new trader or very experienced. Take care, everyone. See you soon. Bye-bye.